Coming up on Market to Market. Drought tightens around the nation's wheat and corn crops, while wildfires ravage the West using fuel from winter rains. And exploring the use of genetically engineered insects. Those stories and market analysis with Tomm Pfitzenmaier next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, July 14 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Legendary sports broadcaster Keith Jackson said his trademark, "Whoa Nelly," to describe big plays. He could now be using it to characterize consumers holding back on their spending. Retail sales, roughly 70% of U.S. economic activity, fell 0.2% in June after a decline in May. Much of the reduction comes in trips to restaurants, department stores, and gas stations. When you remove volatile auto sales, the rate also moved lower by 0.2%. Shoppers might be buying less, but the price they are paying for goods is stable as the Consumer Price Index remained unchanged. Eliminating the unstable factors of food and energy, the CPI rose 0.1%. Inflation remained stagnant last month as the Labor Department reported the Producer Price Index rose 0.1%. Retailers in some corners of the Grain Belt are selling more mops and cleanup supplies following major weather events. This week, more than 7 inches of rain fell in parts of Kenosha County, Wisconsin. Others received less and could classify the precipitation as a billion-dollar grain maker. But for those a few hundred miles away, just a half inch of moisture for their crops would make them happy. John Torpy reports.
Hot, dry weather is plaguing parts of the country, with parched ground in the high plains ravaging wheat production, while a wet winter has failed to prevent summer wildfires in the west. Areas of moderate to extreme drought expanded across eastern Montana and the Dakotas this week. More than half of the winter wheat crop in South Dakota is rated poor to very poor. USDA Chief Sonny Perdue recently authorized emergency grazing on grasslands enrolled in the Conservation Reserve Program in Montana and the Dakotas. The order also provides farmers and ranchers within 150 miles of those heat-damaged counties to take advantage of the disaster directive. Federal officials have expanded the reach of the emergency order and, starting on Saturday of this week, will allow CRP contract holders to donate their hay to livestock producers in drought-stricken regions of South Dakota. In the west, nearly 300 square miles of rangeland have become home to 1,500 firefighters battling grass fires. A half dozen blazes in northern Nevada and California have been sparked by the recent growth of cheatgrass, brought on by plentiful winter moisture. California officials said ample snowfall helped end 5 years of drought and promoted thick spring blooms of vegetation that were dried by the summer heat, creating a ready fuel source for unpredictable wildfires. The danger has been coupled with tinder dry forest conditions that have set the stage for the recent devastation.
There's a lot of dead and dying slash, which allows the fire to spread rapidly.
What we have here is a backing fire that is burning down with very low intensity. It's highly susceptible to changes in humidity like we're seeing when the marine layer moves in. So we would like to get in there and stop it.
The National Interagency Fire Center's 4-month outlook shows elevated wildfire danger in the high plains and the southwest. However, with cooler conditions in the forecast, fire crews are expected to receive a welcome break. For Market to Market, I'm John Torpy.
Tennessee joined other southern states in limiting the use of herbicides containing dicamba. Missouri and Arkansas have already changed policy on the chemical's application following complaints. As chemicals are used to fight weeds, it wouldn't have been possible without a change in genetics. And trait manipulation isn't just for plants. Genetically engineered bugs are also enlisted in the fight against unwanted guests. Colleen Bradford-Krantz has our cover story.
Last summer, some southern Floridians were pondering the possible release of a transgenic mosquito that might slow the spread of the Zika virus. Sam Glucksman, a plant doctor at Hundley Farms, was less concerned about a genetically modified bug than the corn silk flies invading the company's sweet corn fields.
Not many people are talking about it. Again, probably has a lot more to do with the fact that we don't have a lot of Zika cases here in Palm Beach County, or at least where I am. I would say down south is they're probably talking about it a lot more.
Residents of the Florida Keys, where release of the newly engineered bug is still pending, did talk about it. Some protesting and others advocating for slowing the spread of the potentially debilitating virus. The genetically engineered mosquito joins an altered diamondback moth in New York State in having been given the federal government's green light in terms of no significant environmental impact related to pending open field trials. Several decades of lab work have set in motion the potential for genetically altered bugs that some say may reduce the use of pesticides while protecting human health. The mosquito species that carries malaria in Africa is anticipated to be an early target.
In the case of insects of human health concern, there's a strong argument to be made that eliminating those insects locally or perhaps even globally might actually be a good thing.
Some, however, are leery of being quite so aggressive in altering a species' population.
These mosquitoes have a role in the ecosystems in which they live. In the case of Anopheles gambiae in Africa, this is their natural environment. We're not talking about wiping out all 3,000 species of mosquito that exist in the world. It's a technology that would be specifically targeted, in the case of Africa, to the human malaria transmitting mosquito Anopheles gambiae.
Regardless, Obrochta and Glucksman believe the public needs to be better informed.
Most average people really don't know the facts and the science behind it. I think the biggest misconceptions are that these animals are going to get loose and somehow mate with native indigenous species and create some crazy mutant that's going to be resistant to everything and is going to eat your children while you sleep. People are just so scared, and they don't need to be so scared.
The engineered mosquito, developed by the Britain-based company Oxitec, contains a self-destruct mechanism created by inserting a gene into the bug's DNA. The gene causes the mosquito's offspring to die before reaching adulthood. Other nations have released Oxitec's mosquitoes in early tests aimed at reducing illness and death from mosquito-borne disease. Besides potentially benefiting human health, proponents also see the possibility of using genetically engineered bugs to reduce insecticide use.
If it works, great. We don't have to introduce possible poisons or toxins to the environment and kill off, non-target animals. That would be the pro. The con would be what's saying that those mosquitoes are going to stay here. It's just like any other biological control. I mean, you can release them, but as soon as you do, they're free to go wherever they want. It doesn't mean they're going to stay here and take care of your problem. They might go next door and take care of that guy's problem.
As with the decades-old radiation sterilization programs that nearly wiped out several problematic insects, entomologists like Obrochta say the releases would need to be coordinated over a large geographic area. Oxitec is also involved with Cornell University's pending field trials in upstate New York, where genetically engineered diamondback moths would be released in a 10-acre area. Female offspring die before reproducing. Diamondback moths, which quickly develop resistance to insecticides, cause an estimated $4 billion in damage worldwide annually to food crops like broccoli, cabbage, and cauliflower.
In the plant crop world, it's a huge catch-22 because people complain that we use too many chemicals, but yet you don't want a single spot on your tomato, and you want that tomato to be nice and juicy, but you don't want any bruises on it. And it can't have any pesticides on it whatsoever. It has to be totally clean and perfect and the right color. It can't be kind of green. It has to be all red. You know, at the same time, the only way to do that is to use the very things that you are telling us that you don't want us to use.
Obrachta says that Gene Drive, a powerful tool that has yet to be tested outside the laboratory, allows an individual bug's genetic code to be passed to nearly all of its offspring. By engineering all the insects to be male, for example, scientists could wipe out a species in an area. Gene Drive, which can occasionally occur in nature, could help reduce human health threats or push out invasive species from an area. Non-native insects and pathogens cost an estimated $40 billion annually in the United States alone. This is not to say that the scientific community has not considered the pitfalls to the process.
There's been a lot of discussion about applying these types of technologies for the purposes of controlling, say, invasive species of all types, not just insects, but fish, plants, and so on. The environmental impact can't be dismissed and needs to be investigated for each of these situations where people are planning to try to eradicate a species from an environment.
According to Obrachta, those who research Gene Drive's potential are also looking for a way to turn off any modifications should something go wrong. They will also consider potential impact on other species should one disappear. Companies like Oxitec have been waiting for federal or local approval before releasing their genetically altered bugs. It remains to be seen how the rest of the country will view the potential risks and rewards of this new approach for battling pests. For Market to Market, I'm Colleen Bradford-Krantz.
Next, the Market to Market report.
Hot and dry forecasts sent the market dramatically up the hill early in the week, but an end-of-the-week sell-off brought on by favorable rain and temperatures allowed gravity to take over, and the commodity markets moved lower. For the week, the nearby wheat contract gave back 24 cents, and the nearby corn contract dropped 4% or 16 cents. Soybean losses were less severe as the August contract was down 12 cents. August meal weakened $7 per ton. In the softs, December cotton fell $2.01 per hundredweight. Over in the dairy parlor, August Class 3 milk futures added 18 cents. Livestock was mostly higher as the August cattle contract improved $3.02 and nearby feeders jumped $9.25. The August lean hog contract shed $3.33. In the currency markets, the U.S. dollar index nearly touched a 10-month low, falling 86 points. Crude oil improved $2.31 per barrel. COMEX gold retraced some of last week's losses to add $17.80 per ounce. And the Goldman Sachs Commodity Index expanded nearly 9 basis points to finish the week at 373.50. Here now to lend us his insight on these and other trends is one of our regular market analysts, Tomm Pfitzenmaier. Tom, welcome back.
Thanks, Mike.
In case you want to go over things again, you can listen to our market analysis and Market Plus podcasts anytime online at iptv.org/MTOM. Now, Tom, we saw a big pullback following Wednesday's USDA WASDE report, where yields were left unchanged. On the June report, it seemed as if the trade really responded to that. Why was that so shocking?
I have no idea, because basically all the USDA did was take the June 30th stocks and acreage numbers, plugged them in, made a little adjustment for demand on beans. It's been pretty good. And I don't know what else anybody expected them to do. I mean, the crop condition ratings hadn't changed much, so there was really, and there's a real reluctance to change yield in that July report anyway.
It's still early. Yeah.
So that was beyond me too, that so many people were surprised by the thing. I mean, it was a bit negative for corn, no doubt about it. You increase acreage, a million acres, stocks go up a little bit, the carryout jumped when I guess some people thought it was going to drop. So, I mean, in that respect, it was, but, you know, if you shift over to weather didn't necessarily improve all that much. So I guess I was a little surprised to see everybody run for cover like they did.
All right, and now I want to talk about the wheat market. I was up in South Dakota this week, had the chance to talk to a couple spring wheat producers, and they're just bailing. There's no production to speak of in their part of the world, yet we saw wheat of all classes pretty aggressively sell off. Is that overdone? Is it done? Was it time? What are your thoughts on wheat?
You know, the main driver in the bullishness in wheat has been the Durham wheat and the Minneapolis wheat contract, and that's where the real excitement's been. On the other contracts, you had the funds pretty heavily short Chicago wheat, so they saw that going on in Minneapolis, and everybody covers their shorts. The reality is there's still a lot of wheat in the world. I mean, every month there's somebody harvesting a big chunk of wheat. And I understand that this year's wheat crop in the U.S. is not that great, but demand's also not that great. You've rallied wheat up to the point where you're going to start hurting the feed usage on that side for wheat. So, you know, I mean, we've had a nice pullback. The market got a little overbought, needed to correct, and did. I don't know, maybe, you know, you might see Chicago wheat pull back in that 480, 485 range, which is a little lower than what we closed on Friday, but I don't see from these levels that we're going to lose too much value. We're probably going to see more wheat acres planted again next year. So that on top of all the other wheat around now, there are some problems in Europe and in Ukraine and parts of Russia on their wheat crop, and the market's kind of watching that too. But again, that should be somewhat supportive on anytime you break a little bit here.
Okay, so you know we're $1 higher than we were just 2 months ago.
Right.
How aggressive do I need to be on making some sales, both for wheat that's coming out of the combine today, but also should I be looking ahead at 18?
Both. I think if you know, we kind of like to look at retracements. If you get a 50% retracement from the high down to where probably where we were Thursday night, Friday morning, I think that's where you'd have to look at to start stepping in and maybe moving some product. As far as the 2018 goes, we like selling the 2018 corn up there. Wheat, I guess I'd like to see a little more strength in that market before I got too frisky. But if you're going to plant a bunch more acres, you certainly should be looking at that, I think.
All right. Now, we've got a question here from one of our followers on Twitter. This is from Josh in Minnesota at JoshDeal1, and we encourage all of you to send in questions on Facebook and on Twitter. Just search for Market to Market. Josh wants to know, after watching this collapse of the commodities, the grains, after Wednesday, will wheat have to drive the entire market up again, or have we topped out? Did we put in our summer rally?
I think wheat's leadership is probably starting to wane. I think if you're going to have any leadership, it's probably going to come in the corn and bean market, and I'm not even sure corn can lead. You know, we've got the critical month of August coming up in beans, and I would guess if I had to bet on a leader, it'd probably be on the bean side. All
right, well, let's come back and talk about corn. We saw $4 corn. We saw $4.10 December corn. Now we've given that back as of the close on Friday, down under $3.90 again. Are we going to make another run at $4? Are we just waiting for more negative crop progress come Monday?
Yeah, I don't think there isn't anybody that doesn't believe the crop condition rating is going to drop another 1% or 2% on Monday afternoon. I think that's probably cooked in the books already. Yeah, December corn hit 417.25. We thought 417. We had that as an objective, so we kind of satisfied that. I don't know. I think it's going to be very difficult to take that out unless something really extreme happens in the 2 weeks. Having said that, I wouldn't be a bit surprised to see us re-challenge that. You get up in that 405, 417 area, I think you'd have to start making some sales. Now, a ton of people had sell orders up in the 420 to 450 area, got none of them filled. And so everybody was a little nervous when this thing broke this week. I think if you start reaching back up to those highs, you have to at least start getting started and get something sold.
Now, after this break, we still have a lot of producers sitting with a lot of old crop corn in their bins. How do you want to handle pricing that, getting that unloaded after this almost 30-cent break in the market?
Export sales in corn were terrible. We don't have an export market. The South Americans have got the export market really through harvest. So what are you going to do? How are you going to get that grain marketed in a good way? You've already seen a rally now that you've missed. you're sitting on this stuff, you're paying storage on it, or it's sitting in your bin. You've got a somewhat decent crop coming on. I just think you have to use these rallies and move it. And I understand nobody likes the price they're going to get for it, but what are you going to do? I mean, you put it in storage and then pay a bunch of money to store it and go backwards there. You know, maybe if you're desperate to own corn, maybe sell it and buy the futures. The basis is going to be terrible, but it's not going to improve any on you. I mean, the end users know you're sitting on that stuff, and there is no incentive for them to pay up for it.
So just rip the Band-Aid off, start making some sales.
Yeah.
All right, new crop though, let's just sit and wait, keep an eye on that crop progress, maybe hold out for a 4 in front yet again.
Yeah, on the futures.
On the futures,
yeah.
right.
I think, again, you get up in that 405 to 417 range, I think you got to start doing something.
Okay. Well, now let's talk soybeans. Soybean crop, as you mentioned, we did see some changes in the demand. The crush has been very strong domestically. Not a lot of farmers have those old crop beans on hand anymore. As you look at new crop, we're still hanging in there right around $10. How do we handle that? Just cross our fingers till August, or start making some sales Monday?
I think one of the reasons beans were able to put a little more on than corn was because you didn't have that farmer. So I think there was a fair amount of farmer movement on the corn market as we went up, but the farmer wasn't sitting on that many beans, so that you didn't have quite the lid on it. Plus, you had the funds short, over 100,000 contracts at the beginning of this thing, and they weren't short near that much in corn. So that all magnified the move in soybeans. Again, they had a pretty good pullback. You know, who knows what weather in August is going to be, and that's the critical thing for beans. But I'd certainly think if you get up in that 1020 to 1050 range again, you better start moving some new crop and finish up on your old crop sales.
All right. Keep an eye on those prices.
Right.
We look out to the future. Now, Tom, I did just want to get your thoughts real quick on the cotton market. We've continued to pull back down another $2. What's going on?
Cotton market is acreage pulled back a little bit, and that didn't seem to have much effect. Stocks were down quite a bit, and I think that's part of the issue with the cotton market. That thing's hovering right on support. If we take out, I don't know, what, 66, 66.10, somewhere in there. If you take that out, then there's nothing but dead air under the cotton market all the way down to 61.50. So, you know, I'm not saying make sales at 66, but you better keep a close eye on it and use any rallies to make sales because we're sitting at a kind of a vulnerable point here.
That's a $4 drop to the downside that's you'd notice.
Yeah, you wouldn't want to participate in that if you didn't have to.
No. Now let's talk about livestock. We did have some good news in the cattle markets. We did see a little bit of strength return to that market. Does it look like we've put in at least a medium-term low in the live cattle futures?
I think so. I thought the cattle market ended up, that limit day up we had there in the middle of the week was certainly positive. But once again, you continue to have the cash market higher than the futures, which is always positive. You've got the back months discounted, so the producers are incentivized to continue to move product. Export sales are quite good in beef and have the prospects of maybe getting better here. You know, like you said, the dollar at 10 months lows.
Yeah.
That's certainly helpful. So I guess I'm somewhat optimistic in beef. Having said that, I think if you get that fourth quarter December contract up in that 121, 122 range, I think I'd want to be pulling the trigger on some of that fourth quarter production.
Now, as you look out at the fourth quarter contract, December contract, would you be looking to sell futures directly, or would it make more sense to buy a put option?
That really depends on whether you think we're going to go higher than 122.
Okay.
If you think 122 is it, then the future. If you think, well, I'm going to make it sale at 122, but I really think it's going to 132, then you'd want to use the put. So it kind of depends on what your
market,
right, what you're comfortable with, and what you think the market's capable of doing. I mean, we did have last spring numbers up that high, so you can't say never, right? But I'd say it's unlikely.
All right.
And there are a lot of people uncomfortable with selling the futures, and they've been burned pretty badly in this past year. So I can certainly understand why a lot of people would step in and buy puts.
Okay.
Just because it's a little you can sleep a little better at night sometimes.
Yeah, you're not worrying about a call from the margin clerk.
Right.
Now, let's talk about the feeder cattle market, up almost $10 on the week. Is this just indicative of those cattle feeders finally making some money and getting to the barn and making purchases?
Well, I think it's a combination of two things. Like we just said, the fat market's relatively strong. You had a big break in the corn market and the meal market, so your feed costs have gone down, which is always positive for the feeder market. Now, if we go back up and retest the highs, I don't know if that's going to be sort of a headwind for the feeder market or not. I think we're up in that 155 range. I do think we have the capability of running feeders up in that 161, 162 range before they start to become way overbought. So I guess I'd hold out for something up in maybe in the 158 to 162 range and start making some sales up there. But those are some pretty fancy prices for feeder calves, I think.
Yeah, they are. For 8-weight steers, it's a pretty decent check.
Yes.
Now, let's talk about lean hogs. We broke that nearby back under $80. From a technical perspective, Tom, what are you watching for?
That market doesn't look good. I mean, we had really poor exports. I mean, that's a whole export-driven market, and didn't have very good export sales last week. Now, I understand it was a holiday, you know, the 4th of July was in there, and there's some of that in the mix. So I'm not sure you want to make too much out of that yet, but I think we really need to keep a close eye on that export market on pork. I just think the hog market's getting really toppy.
Okay.
And I think if you get any recovery rallies on that, technically it really does not look good at all. Again, it's on the verge of breaking out through the bottom side of some pretty important chart points on the pork chart. So I'd be pretty cautious there. Be relatively aggressive especially on the December hogs up in that 66, 67 range.
All right. Well, Tomm Pfitzenmaier, thank you so much for taking the time to join us.
Thanks, Mike.
That wraps up the broadcast portion of Market to Market. However, Tom and I will keep the conversation going, including answering more of your questions during Market Plus, which is available in podcast and video form on our website. And while you're there, check out the Classroom. This virtual schoolroom allows you to explore the science, technology, and business of agriculture. Join us again next week when we look at how a plan set in motion decades ago is paying it forward to a new group of farmers. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.